So what exactly is this big, beautiful bill, and why is everybody talking about it? It's being called a massive shift of wealth, with big tax breaks for high earners and deep cuts to the programs that millions of Americans count on to survive. Here's the bottom line. This bill is going to hit your wallet one way or another. In this series, I'll talk about what's changing, what it means for you, and how to protect yourself if you're on the losing side of this deal, or help others that are. So what exactly is this big, beautiful bill? In short, it's a massive, sweeping overhaul of how money, power, and public policy work in America. Officially named the One Big Beautiful Bill Act, it was created by Trump's team and marketed as him delivering on his promises made on the campaign trail. It was passed by Congress and officially signed into law on July 4th, 2025. The bill is nearly 900 pages long, and it covers everything from tax policy to healthcare, drilling on public lands, and even gun accessory rules. But if you're wondering what matters most for your bottom line, here are the 4 sections that can directly impact your finances. Number 1, tax changes. Number 2, healthcare cuts. Number 3, food assistance or SNAP benefit reductions. Number 4, student loan rule changes. And here's the catch. No matter how much you earn, high income, low income, or somewhere in between, these changes are going to affect you. So you may want to pay attention and learn what you can about the changes headed your way. In this video, I'm going to focus on number 1 on this list. Let's talk about the tax changes in the big, beautiful bill and who actually benefits. Mostly middle and high income earners. If you're in a low tax bracket, this bill largely leaves you behind. Let's rewind for a second. Back in Trump's first term, we got the Tax Cuts and Jobs Act in 2017. It lowered tax rates across the board, except for the lowest earners. All those cuts were meant to expire this year. What this new bill does is make those cuts permanent, but again, only for the brackets that got cuts in 2017. And that lowest tax bracket is still untouched. So if you're already in one of the middle or upper brackets, your rate stays low. If you're in the bottom bracket, you won't see any change. But this is where things get interesting. Deductions and credits. This is where most of us will actually feel the difference. Here are a few of the key changes you should know about. No tax on tip and overtime income, up to a cap based on your income. New deductions for car and home loan interest within limits. Seniors earning under $75,000 get a $6,000 personal exemption. And the state and local tax or SALT deduction cap jumps to $40,000 for married couples. The bill also rolls back many of the clean energy credits for buying electric vehicles and other green energy and energy efficiency home projects. And there's a huge change to the estate and gift tax. You can now give or leave up to $15 million to your heirs, tax-free. $30 million if you're married. That's a game changer for wealthy families. You may have heard people say Social Security won't be taxed anymore. That's not true. The bill does not change how Social Security is taxed at all. The big, beautiful bill does create something brand new that benefits babies: Trump savings accounts, investment accounts for kids born during Trump's current term. Here's how they work. The government puts $1,000 in the account at birth. Families can add up to $5,000 a year. Money grows tax-free until the child turns 18. Then, at age 18, they can use half for things like college, buying a home, or a business. At 25, they get access to the rest, still only for qualified expenses. At 30, they can use it for anything. Withdrawals are taxed at the capital gains rate, which is lower than the income tax rate. So how much money does this really add up to? If the market grows at 7%, that $1,000 at birth could be worth nearly $7,000 by age 20, and that's without the family adding any more money. So what do business owners need to know about the big, beautiful bill? If you own a business or are self-employed, there are some big tax changes that you should know about. The 20% pass-through income deduction, originally set to expire, is now permanent, which could mean major tax savings for sole props, partnerships, and S-corps. The bill also doubles the amount you can immediately deduct for equipment and business expenses under Section 179, making it easier to reinvest in your own business. But to take full advantage, you'll need solid bookkeeping and smart year-end planning. This is one area where good tax advice can really pay off. So who actually benefits from the tax changes in the big, beautiful bill? Top earners benefit the most from the permanent tax cuts and the expanded estate tax exemption. They also are likely to be able to fully fund Trump accounts, which may allow them to further transfer wealth to the next generation. Small business owners and the self-employed benefit from the permanent 20% pass-through income deduction and expanded expensing rules, which can significantly lower their taxable income if they plan strategically. So who benefits less or not at all? Lowest earners were left out of both the original tax cuts and the new bill's permanent changes. Many of the temporary perks, like tip and overtime tax exclusions, are helpful for lower and middle income earners, but they are short-lived, and they still rely on careful tracking and documentation. There's also the issue of lower income families losing health and food benefits, and everyone who can't pay for college out of pocket, losing financing options and their safety net. I'll talk about all three of those things in the next 3 videos. Overall, these tax changes are a big win for wealthier Americans. They offer some short-term perks for others and introduce a new savings tool for future generations with a direct benefit for babies born during Trump's presidency. Bottom line, these tax changes deliver serious benefits, but they're not evenly distributed. If you're not already doing well financially, you might not feel much of a boost at all. So, what can you do to prepare for the big, beautiful bill tax changes? There are 7 things you can do to prepare yourself. Number 1, if you earn tips or work overtime, track every dollar. Up to $25,000 in tips and $12,500 in overtime is tax-free this year if you qualify, but only if you can document it and your income is under a certain amount. Number 2, if you usually file your taxes on your own, consider getting help. With so many changes, having a tax professional review your return next year might save you more than their fee. Number 3, if you or someone you know is having a baby during Trump's term, file for a new Trump savings account. The $1,000 government deposit can grow significantly by the time that child turns 18. Number 3, if you have a mortgage or auto loan, save your interest statements. Some of that interest may now be deductible under the new temporary rules, which can lower your tax bill. Number 4, if you live in a high tax state, talk to your accountant about taking advantage of the temporary increased $40,000 SALT deduction cap. Number 5, if you're thinking about transferring wealth or setting up a trust, talk to an estate planner. The estate and gift tax exemption is now $15 million, which could save your heirs a lot in taxes. And finally, don't just rely on social media headlines. A lot of misinformation is floating around, especially about things like Social Security taxation. Stick with credible sources and double-check any information before making any financial decisions. The Big Beautiful Bill Act is a sweeping law with long-term consequences. It makes permanent the tax cuts that favor higher earners, introduces some short-term relief for workers and families, and rolls out a new savings plan for newborns. But it also leaves the lowest earners out of many benefits. If you're in the middle or upper income brackets, this could mean big opportunities for tax savings and wealth transfer planning. If you're not, it's even more important to stay informed. Keep good records and take advantage of any deductions or credits that apply to you. Thanks for listening, and subscribe to hear more simple explanations on how the Big Beautiful Bill will affect your money and how you can prepare for the changes. And now for some legal language. I am a certified financial planner professional, but this is not legal, tax, or financial advice. You should consult a professional who knows your particular circumstances before making any changes based on the information in this or any other video. Thanks for watching, and subscribe for more simple money explanations.